Welcome to this YouTube channel. In this video, we are going to talk about top 10 stocks to invest right now. So before starting this video, please like this video and subscribe to this channel for our future updates. Number 10. CrowdStrike Holdings, Inc. According to the tech billionaire, the cybersecurity platform, Nasdaq, CRWD, is one of the strongest growth stocks to invest in. Tiger Global Management began investing in CrowdStrike in the first quarter of 2019, and in the September quarter, it increased its stake in the cybersecurity platform by 49%. CrowdStrike Holdings has proven to be a profitable venture for the hedge fund. CrowdStrike's stock has risen nearly 270% in the last year, with further gains anticipated in the coming months. In the most recent period, sales increased by 86% year-over-year, while subscription revenue increased by 87% to $213.5 million, thanks to the addition of 1,186 net new subscription customers. We kept pushing operating leverage and unit economics to new highs. Our GAAP operating loss year-over-year, achieved non-GAAP operating profitability for the third consecutive quarter, and created positive operating and free cash flow for the fifth consecutive quarter. As a result of our good execution in the quarter, Bert Podbeer, CFO, agrees. Number 9. Pinduoduo Inc. PDD is ranked number 9 on our list of the top 10 stocks to buy right now. Pinduoduo, Nasdaq, PDD, a Chinese social e-commerce behemoth, has also been gaining the confidence of one of the best tiger cubs in recent quarters. In the third quarter of 2018, the tech billionaire began investing in the Chinese online platform. In the September quarter of this year, Coleman increased his stake in the online platform by 149%. A number of other hedge funds, including Tao Value, have expressed interest in the Chinese social e-commerce behemoth. PDD was a relatively new place, since last year, Tao Value explained, refer to our 2018 Q3 letter for detailed thesis. PDD returned plus 5-6% in the most recent period, aided by a strong earnings surprise. PDD recorded plus 169% YoY revenue growth, plus 171% YoY GMV growth, 41% YoY active buyer growth, and plus 98% annual spending by active buyers in its Q2 18 performance, all of which outperformed the street by a wide margin. However, we were not surprised because our analysis concluded that PDD had a good chance of competing with the incumbents. It is a more ferocious fight, now that the issue is no longer whether PDD will compete, but rather how it competes. We should be careful with its discovery of other neighboring playfields, because of its superior mission and vision. I'm particularly interested to see how their brand cultivation, C2M, and logistics initiatives progress. Number 8. Sea Limited, Shay is ranked number 8 on our list of the top 10 stocks to buy right now. Sea Limited, NYSE, Shay, an e-commerce, gaming, and fintech business, is Chase Coleman's 8th largest stock holding. During the third quarter, the company made no improvements to its stake. Tiger Global Management holds 8.3 million shares of Sea Limited worth $1.2 billion, accounting for 3.79% of the company's total portfolio. E-commerce, gaming, and fintech platform shares have risen 400% this year, owing to strong revenue growth. Its GAAP sales of $1.2 billion in the most recent quarter rose by 98.7% year-over-year. Bookings for digital entertainment in fiscal 2020 are projected to be in the region of $3.1 billion, up 75.4% from 2019. Number 7. Alibaba Group Holding, 7 on our list of the top 10 stocks to buy right now. Over the years, Coleman's portfolio has included Alibaba Group Holding, NYSE, Baba, a Chinese e-commerce platform. The hedge fund owns 4.4 million shares of Baba worth $1.31 billion, accounting for 3.88% of its total holdings. Alibaba shares have risen more than 200% in the last 5 years, enabling the tech billionaire to profit from his investments in China's largest e-commerce site. In the most recent quarter, the company's sales increased by 30%, and earnings per share of $2.68 beat the consensus estimate by $2.65. According to the group, mobile mouse on its China retail marketplaces reached 881 million in the most recent quarter, up 7 million from June 2020. Barron Opportunity Fund praised Alibaba's future fundamentals in a letter to investors. Alibaba Group Holdings Limited is China's largest retailer and e-commerce company, according to Barron Opportunity Fund. Alibaba owns 33% of Ant Financial, which runs Alipay, China's largest third-party online payment service, and operates the shopping platforms Taobao and Tmall. Alibaba's stock rose on the back of a sustained recovery in core commerce, boosted by higher purchase frequency and per-order spending. We believe Alibaba's core business remains profitable, helped by rapid growth in other regions. Number 6. Carvana Co., Carvana Co., NYSE, CVNA, an online used car buying and selling e-commerce site, is one of the best performers in 2020. Tiger Global's e-commerce platform is the company's sixth largest stock holding, accounting for 3.95% of its total portfolio. Currently, the company owns 6 million Carvana shares worth $1.34 billion. Steel City Capital expressed trust in Carvana in a letter to shareholders. I believe market expectations for Carvana, CVNA, are disconnected from what the business is likely to produce, especially over the next several quarters, the firm said. One of the company's main value points, buying a vehicle from the comfort of your own home with no direct human contact, is well suited to a world of social isolation. Shares have risen 6.4 times from their low of $22.16 to their current level of $141. The market now has higher expectations for CVNA than it did at the start of the year. What I think investors tend to recognize is that the company is currently operating at a disadvantage, which should become clear in the third quarter results. In March and April, CVNA made a strategic decision to reduce used vehicle inventory purchases in order to retain liquidity. Although the company has resumed purchases, the inventory reported on the company's website is still well below what it was earlier this year. As a result, future retail revenue volumes will be impacted. Number 5. Apple. In the year 2020, Apple has become a juggernaut. On its way to a world-leading market cap of $2.2 trillion, its shares have climbed 74% to a recent $128. The stock is historically high, selling at 32 times estimated earnings of $3.95 per share for the fiscal year ending in September. But, thanks to concurrent product cycles, such as the latest one, which includes the hot new iPhone 12, Apple has never been stronger. According to reports, Apple will increase production of that smartphone by 30% in the first half of 2021. The new Apple-designed M1 chip and the work-from-home trend have re-energized the Mac laptop franchise. Watch sales are soaring, as are sales of the recent $549 AirPod Max over-the-ear headphones, which have already sold out for the first quarter. Then there's the $60 billion services market, which is profitable and annuity-like thanks to new products like fitness. Investors will have to temper their ambitions after 2020, according to JP Morgan analyst Samik Chatterjee, but he still sees upside to $150 per share, based in part on an above-consensus earnings forecast of $4.45 per share for the current year. Number 4. Berkshire Hathaway. Berkshire Hathaway is coming off one of the worst stretches of success in terms of the sample 500 in Warren Buffett's 55 years as CEO. Since the start of 2019, the market has returned 44 percentage points less than the S&P 500. After poor periods in the past, such as the 1974-75 bear market and the 1999 tech bubble, it has paid to buy Berkshire. Berkshire Hathaway, for example, increased by 129% in 1976. Investors are now worried about what will happen when Buffett, who is 90 years old, retires. The company's Class A shares, which are currently valued at $338,500, tend to be a steal at 1.2 times Barron's estimated year-end book value of around $279,000 per share, compared to an average of 1.4 times over the previous 5 years. Berkshire Hathaway's intrinsic value, according to Buffett, is slightly more than 1.2 times book value. The Class B shares are currently trading at around $222. Berkshire Hathaway is both a defensive and a reopening play, due to its $145 billion cash hoard and its many economically responsive companies, like the Burlington Northern Santa Fe Railroad. Number 3. Telos Corporation, Nasdaq, TLS. Telos Corporation is a cybersecurity company that specializes in cyber, cloud, and business security. The organization was recently awarded a $13.5 million contract by the Federal Bureau of Investigation, FBI, for enterprise risk management. The FBI could use the Xacta solution under the terms of the contract. Stephen Ng and Andrew Mitchell's Ophir Asset Management, which had 938,000 shares of TLS worth $30 million at the end of December 2020, is one of the top hedge funds with stakes in the firm. Number 2. Array Technologies, Inc. Nasdaq, ARRY, Array Technologies, Inc. One of the world's leading manufacturers of solar monitoring systems. By the end of December, 29 hedge funds in our database had a stake in Array Technologies, Inc., up from 0 funds in the third quarter. The organization made $139.5 million in sales in the third quarter of 2020. After the market closes on March 9, 2020, the company will announce its fourth quarter and full year 2020 results. Number 1. Maravai Life Sciences Holdings, Inc. Nasdaq, MRVI. The life science firm produces innovative vaccines, diagnostics, and drug therapies. In November 2020, an insider bought 35,000 shares at $26 each. Since then, the stock has increased by 23%. The company completed its initial public offering of 69 million shares of Class A common stock in November 2020, at a public offering price of $27 per share, including the underwriter's option to buy up to 9 million additional shares of Class A common stock. Maravai earned approximately $1.86 billion in gross proceeds from the sale. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go.